Γεια σας, καλησπέρα. Καλώς ήρθατε ξανά σε μια εκδήλωση του ΣΕΣΑΕ και μάλιστα την πρώτη διαδικτυακή μας συνάντηση. Πήρε πολλά χρόνια τον σύνδεσμο από το 1933 που ιδρύθηκε, αλλά το καταφέραμε και αυτό και είμαστε τώρα live διαδικτυακά. Εκ μέρους του Διοικητικού Συμβουλίου θα ήθελα να σας ευχαριστήσω για την συμμετοχή σας και χαίρομαι πάρα πολύ που είμαστε όλοι καλά μετά από αυτά που περάσαμε τους τελευταίους μήνες. Η δική σας ανταπόκριση και η υποστήριξη των χορηγών μας είναι ένα μεγάλο κίνητρο για μας για να συνεχίσουμε τις δραστηριότητες του συνδέσμου διαδικτυακά ή και φυσικά όταν οι συνθήκες το επιτρέψουν. Θα ήθελα να θυμίσω ότι μπορείτε να υποβάλλετε τις ερωτήσεις σας στη διεύθυνση info@sesae.gr info@sesae.gr. Εδώ θα μου επιτρέψετε να συνεχίσουμε στα αγγλικά, όπως θα είναι και το υπόλοιπο της σημερινής μας εκδήλωσης. So, good afternoon, everybody. Good afternoon, dear speakers. We do have the honor to have with us today two well-recognized executives who accepted our proposal and will be sharing with us today their views on the evolution of the environment the insurance industry is operating in. Let me briefly introduce Mr. Jad Ariss, Managing Director of the Geneva Association. Mr. Ariss will share a little bit more about the association in a few minutes, but I would like to mention that the Geneva Association is aiming to be the voice of insurance globally and has already covered a lot of ground during the past 70 years or so it is in operation. So, amongst the members of the association, I would like to share that we have many global insurers. Some of them are operating in Greece, and this, is another indication of how connected the markets are, and working together we can achieve more. So, Mr. Ariss has been the managing director of the Geneva Association since 2019. And before that, he had a very successful and long career with AXA in senior roles. I would mention two. I recall right now CEO for EMEA region and head of, at group level, head of public affairs and corporate responsibility. So, good afternoon, Mr. Ariss. I think now you are in Zurich.
Yes, I am.
Great. And I see you are in the office.
Yes, I am in the office.
It's going to be, getting more and more usual for us. Our next speaker, Mr. Αλέξανδρος Σαρρηγεωργίου, President of the Hellenic Association of Greek Insurers and President and CEO for Eurolife. I don't think that he needs to be introduced to this audience. Good afternoon, Mr. Σαρρηγεωργίου. Thank you for being with us.
Thank you, Mr. Chairman. Thank you for taking this wonderful initiative. Now that it's been probably 2-3 months since we no longer see each other as a market physically, it's important that we continue communicating and focus on the future that awaits us.
Thank you. So just one comment about Mr. Ariss and Mr. Sarrigheorgiou. I know that they share at least two things in common. One, that they are very reputable executives in the insurance industry. And the second is that they are both Wharton University alumni. So this is, I think it's a good coincidence and very good pick from the side of ΣΕΣΑΕ selecting the speakers. So, obviously, the market, the environment has changed significantly during the past few months. there have been implications. Some did not actually lost this battle. Some others managed to work very hard and not lose ground. And very few actually managed during this period to leap forward. I can think of some technology companies. But the outlook is, for me, is very foggy. And what we want today from our speakers is to help us better understand what is ahead of us and how we should prepare as an industry, insurance industry, to be more successful and perhaps actually be more successful in the role of the insurance industry in this new era. So without no further delay, I would like Mr. Ariss to let us have your views on the insurance industry. Where do we stand today and what lies ahead of us? Mr. Ariss.
Thank you, Yanis, for this kind introduction. Let me first tell you that I am very honored to have been invited by the Association of Insurance Executives in Greece. It's a real pleasure for me to participate to this virtual event. Let me also, before I answer your question, say a few words to your members who may not necessarily be familiar with what the Geneva Association is. So the Geneva Association is a think tank dedicated to the insurance industry. So it's a non-profit organization serving the insurance industry worldwide. Our members are the CEOs of 70 insurance groups worldwide. You know, to a large extent, the largest insurance groups. We are fortunate to have Fairfax as one of our members. And what we do is we produce research for our members and more generally for the insurance industry. And we organize a whole series of events around this research, conferences, webinars, etc. What makes us unique is that we're actually the only think tank purely dedicated to the insurance industry globally, and that our members are the CEOs themselves of the companies that support us, and this is of great value. We do research on half a dozen topics like climate change, socioeconomic resilience, new technologies and data, etc., and emphasize what is at stake for the insurance industry in these topics. This is just to give you some background. We're a small team, 15 people, based in Zurich. Even though the association is called the Geneva Association, it moved from Geneva to Zurich 5 years ago, and we kept the brand name Geneva Association. I'll stop it here for the organization that I serve, and will now share my thoughts on where the insurance industry stands. And I will start by sharing with you that COVID-19 has revealed a paradox for insurance. This is a major risk that has materialized suddenly, catching the world by surprise. And we could have thought that the insurance industry, whose mission is to protect people and businesses against unforeseen risks, would be at the forefront of the battle against COVID-19. And I'm saying this in a little provocative way, because when we look at what has actually happened and the way COVID-19 is impacting the operations of insurers, well, we have a more balanced view. Let's take each one of the lines of business of the insurance industry. Let's start with life. Of course, there have been too many people dying of COVID-19. But when we look at the numbers, we're seeing an increase in mortality of roughly 5% in the major countries that have been hit. So if we take the United States, the estimates of the final toll will probably be around 150,000 lives, which is roughly 5% of the total number of deaths in the United States. If we take Europe, let's take France, for example, the total toll should be around 30,000. There are 600,000 deaths in France every year, so it's another, again, 5%. So it's important, but in terms of how it's hitting the insurance industry, it's not major. It's not a massive effect. So no massive effect on the life side. Let's move to health. And on the health side, well, because COVID-19 is so severe, in most countries, certainly in Europe, the costs of it are being mostly borne by public health systems. And so the contribution of private insurance to the coverage of costs of COVID-19 will be significant, but will not be major. And so this is another way to characterize the impact of COVID-19 on insurers' operations. And then we go to P&C, and of course, you have all followed the big debate around business interruption, but when we look at it closely, we see that in most cases, the business interruption will not be covered by property casualty policies, by P&C policies, either because pandemics are specifically excluded from the wording of those policies, or even when pandemics are not specifically excluded, the wording of the contracts is such that business interruption is covered only if there's a direct damage to the company. So if there's a fire or a flood, but here there's no direct damage. It's just an administrative closure of businesses. Having said that, there are two specialized business lines which are indeed very severely hit in P&C by COVID-19, event cancellations and trade insurance business. But if we put those aside, the impact on the P&C side is, again, is moderate. And so we have this discrepancy between a major risk that has materialized and the insurance industry that is finding its way through it. And so this questions the relevance of the industry, and it has launched an outcry in the industry. And I'm sure you have seen what has happened in the US, what has happened in several countries. Media, policymakers, public opinion have put pressure on the insurance industry to go beyond what has been written in the policies, which is a very dangerous trend, and to question the wording of those policies. And so I think we are between insurers here, so I think these are things I would not say outside, but between ourselves we could say that the reputation of the industry may have been damaged in this, and the trust in the industry is not very big today. If we did last year a research study, we interviewed customers of the insurance industry across 7 countries, US, Japan, and 5 European countries. And one of the questions we would ask these people is, do you trust the insurance industry? Not their own insurer, but the insurance industry as a whole. And only 20% say, yes, we do. So we have a question here. And I think this COVID-19 thing has materialized that. So once we've said that, I think this is an opportunity for us to reflect on our industry, on the way we do our business. So what can we do? And I think we can do 3 things. The first thing we can do is educate people. And when I say people, it's not only the general public, it's also policymakers and governments who do not necessarily understand what insurance is about. And one of the characteristics they often miss, is the necessity for insurance to be relevant to have some sort of mutualization. The insurance industry cannot absorb a major risk that is hitting all the people, all the businesses, everywhere at the same time, just because there is no mutualization. And they are very striking figures. I mean, the American Association of P&C Insurers, something you may have seen, has calculated that 1 month of business interruption, if all businesses were to be indemnified, would cost $1 trillion, which is more than the total capital of the P&C industry in the US. So in 1 month, you would wipe out completely the capital of the P&C industry. Well, these are facts, numbers, reasoning that we need to communicate to broader audiences. Otherwise, we miss the point of making insurance relevant. So first thing is educate on what are the conditions necessary for a healthy insurance market and for insurance claims to work. The second thing we can do is probably work on our wordings. Very often people tell us our wordings are too complex, not clear enough. In some instances, we have seen examples where wordings were covering epidemics, and then the insurer says, well, this is not an epidemic, this is a pandemic, it's different. These little things hurt us. And so making sure our wordings are precise, clear enough is a second thing we can do. And the third thing we can do as an industry is work between ourselves, I mean between insurers and with the public sector, with governments, to work on schemes that would apply in the case of a pandemic, in the case of a major risk that is uninsurable. So, for example, setting up pools with government backstops, things like that. This work has started in most countries that have been hit by COVID, and this is something we should expect to continue to happen. I will stop here. I may have talked too much, but I thought this was a good way of introducing our topic.
Yes, thank you, Ariss. I would say it was an excellent way to introduce the topic. The paradox you referred to sounds very relevant to what we experienced. The world experienced a catastrophic risk across the globe. Still, our balance sheet remained, as an industry, remained intact. The question is, though, how things will evolve in the future, near future, and going forward. So, thank you. I'm sure that there will be many questions based on your what you just shared, and I'll take this opportunity to remind to our audience that they can share the questions at info@sesae.gr. So, with that, Mr. Sarrigeoργίου, let's hear from you on this interesting and extensively debated topic.
Sure. Thank you, Yanni. Thank you, Jad. First of all, two things. One, I wear two hats today. One, as chairman of the Insurance Association in Greece, but also as chairman of Eurolife. So I have maybe a bit broader perspective than just my company's perspective. And that will allow me to speak to what Jad alluded to before. But let me just briefly start by giving you a little bit of a background of what's been happening here and maybe draw some conclusions out of that may help our discussion. So first of all, you know, we, in any case, in our business plans, but also because of Solvency II, we've been used to working on stress tests and so on and so forth, business continuity and all this for our companies. But at least I don't think many people imagined that come March this year, all of a sudden we'd be facing a black swan event, and we'd have within a week's or a couple of weeks' time to really decide whether to take our company digital and sort of remote work, et cetera, et cetera. So this is an interesting lesson learned in that we found out that black swan events do happen, and that it does help to be prepared for them. And I'd like to set the framework to speak very briefly on an operational basis, on a production basis, and also on relevance of in the industry basis, which is what Jad alluded to. On an operational basis in Greece, I think the industry, and I can speak from the perspective of Eurolife, which went 100% remote. That's 450 people in Greece and in Romania in a matter of a week. It wasn't as easy as it had been in the simulations of our Solvency II stress tests. It took a few days, but eventually the company worked with reasonable KPIs and with people who got really used to very quickly to the new style of working. So this is a test that we passed, and we passed with flying colors. Let's not forget, thanks to technology. Had this happened 5 years ago, when we didn't have 4G, never mind 5G, 4G, we had slower internet. This simply wouldn't have been possible just because of that. So it helps to have good technology, and technology will change our lives, because the point I want to make here, and I think it is very important on an operational standpoint, is that we should not, and at Eurolife, we don't intend to go back to, suppose the virus goes away tomorrow, to go back to exactly where we were before. We should gain on an operational front, first of all, on the matter of work-life balance, of quality of life for our employees. Because if you can find ways, so for example, for young mothers, for example, where working from home may be extremely relevant, or other people, we should find a new balance that will result in happier employees, therefore more productive employees. More productive also means continuing to invest in our digitalization and our technology. And let's not forget, we employ thousands of employees all over the world, and certainly in Greece, and to have a better environmental, a smaller environmental footprint. So these are gains for our industry and for our society that we should not forego. They will need investments, and also they will need adjustment from the state, because, for example, labor laws are, at least in Greece, but I think the world over, are far behind where reality is right now in terms of how people work. So this is one thing. The second point is production. It's interesting, the conclusions you can draw on new production. I can speak for my company, and I think in general for the Greek market. We had virtually no redemptions of people on savings products on the life side. I have my reservations about whether that will last or not, but we have to see. So we were there, liquidity was there and was not pressed at all as an industry. So that is good. New business collapsed badly, and collapsed in different ways depending on the network. We saw resilience from traditional insurance agent broker networks, where production fell but did not collapse. We saw more significant declines in bank assurance networks. We saw growth in online and digital channels. One interesting point is that this started mid-March in Greece. Greece reopened maybe a month ago, 3 weeks ago. Business now is back to where it was, new business is back to where it was before the crisis. So I don't know if this is going to last or not, but it is interesting that we had a V-shaped rebound in new business. And last but not least, our balance sheets. Our balance sheets got really hit with the extreme volatility of the markets, which, as we have now seen, have largely rebounded as well. So again, our balance sheets, and as a result, our solvency ratios, again, are all sort of back to normal. One lesson out of this is diversification. Diversification across channels and across product lines is something that proved useful when things were collapsing, because if one channel collapsed, then you had a different channel that didn't suffer as much, that helped. The same with products. As to the fact that both in new business and on the balance sheet picture, we are virtually where we were before the crisis hit, I'm personally leery and skeptical about whether that's going to last or not. I'll come back to that if we talk about the outlook. But in a way, it's easy to think that, all that happened is we lost a month and a half of new business and things are sort of quasi back to normal. They're not, I don't think. In terms of product, and thank you, Jad, I think you covered all the bases there. So what I want to say is the following, and I want to bring into the discussion today my experience as chairman of the association. So on the matter of business interruption and liability for hoteliers, for example. I had the chance to spend quite a bit of time with very senior members of the government here in Greece and the the Hotelier Association. While I agree with what you said, I have to say that after a lot of explaining, meaning that you need to have a cover and you need to have the right wording and you need to have paid premium for a while before you are insured, there was eventual understanding, because initially the request was not quite as aggressive as happened in the US, for example, or some other place in Europe regarding business interruption, but there were people seeking a cover for a potential second wave, or seeking cover saying, I'm speaking sort of loosely here, I'm not going to open my hotel unless I have cover for COVID-19. Well, it's like your house is on fire, you are not insured, and all of a sudden you want to insure half the house that is not burned yet. Also, as you said, pandemics by definition hit everywhere and everyone. So by definition, the capital in the insurance markets is not enough to cover a pandemic in a traditional way. So ideas like PRIA, the Pandemic Risk Insurance Act in the US, or some sort of scheme where you have a pool of insurers, you cover everything. I'm talking now about COVID-19 plus, COVID-20, not COVID-19. That's not going to happen, I don't think. And then as a backstop reinsurer, you have the state, are ideas that are definitely worth exploring. And I will say that, in Greece, exactly the same happened. I'm not sure about the statistics on deaths, but I'm sure they're pretty similar. Health was borne by the state system, and Greece has done very well, as you may know, but business interruption, there were some very, very few contracts that had specific named risk covering it, and they're going to get paid. But most of the people were not insured. And I know that from the government standpoint, there is big interest in covering this. Also, it makes coverage of earthquake look easier in a way, which we also don't have as a country here, mandatory coverage for earthquake. But there is interest. I think we have proposed to the Greek government and to the Association of Tourist industry to sit around the table. They need to understand the facts. We're not just here to pay money. It's not easy. It's not an easy equation. But while there is a question on trust, there is also a lot of interest on the business side. And I think this is an opportunity to work on that. And the other thing that we have seen is that even though the state took care of all the health and hospitalization part, there is interest on health contracts. There used to be, but now there's even more, because people realize that it's not going to be COVID, but health is important. Last but not least, the one thing I want to mention is investments. We are talking to the government, and I'm sure this happens all over the world. When government comes and says, help us restart the economy, We are the largest investors in the world, and in Greece, we are long-term investors, institutional investors. Let's find the golden rule between solvency capital requirements and capital requirements to restart the economy, be it debt, equity, et cetera, and we could channel part of our investments to new things happening that will create jobs and so on and so forth. I will stop here, and I'm sure there's going to be plenty of questions. Thank you.
Okay, thank you, Mr. Sarigeorgiou. There is a lot of fun ahead of us. This is obvious. The journey is going to be tough. I believe that with strong balance sheets and hardworking, committed teams, we can be successful in the future. But it will take a lot of smart, strategic moves and perhaps flexibility, agility to be successful in this new environment. So, again, thank you both for sharing your views, and we can start the Q&A session. Questions from the audience are welcome. Let me start with one question. You mentioned, Mr. Sarigeorgiou, that the recovery of new business in the Greek market was V-shaped. Which is your view about the economy in Greece and in Europe? How do you think that this will evolve? Will it be V, U, W, Z? I don't know.
All the letters in the alphabet. So let me just say that even though it's very fashionable to be optimistic, I'm not even cautiously optimistic. I'm cautiously cautious. I think as companies, and certainly as a company, Eurolife, we want to be very careful and manage our expenses and other things that we can control, because there is a chance that we are seeing a lull, and then there's going to be a rekindling of the virus and problems. And one other thing, both in Greece and on the world economy, they're forecasting unprecedented negative GDP numbers, negative, huge recession numbers, -5%, -7%, -8%. So Greece fared extremely well the first quarter, much better than the Bloomberg estimates of -2.6 was -0.9. But in Greece, we have the impact of tourism that is ahead of us this summer. We hope it's going to go better than expected, but I'm concerned that the people here and worldwide have yet to feel the impact of this coming recession. Even some people who have lost their jobs, they got massive stimulus and fiscal stimulus and checks in the mail from the government. And obviously there's huge monetary stimulus. We should not underestimate that. But at the same time, they stayed home, there were lockdowns, they didn't spend money. Come September, come October, if you have lost your job and now it's 6 months, 8 months, whatever, then I think we'll see what the real effect on demand is. Of course, the other side of the coin is there is a vaccine, there is some cure if you get sick, and you have the massive, so the uncertainty from the disease recedes, and at the same time you have this massive money printing and fiscal stimulus that happened, and maybe everything takes off. That's the V-shaped scenario. But it may be W, okay? And also, let's not forget one more thing. There's inflation down the line. There's going to be some money. There's going to be, a bill for all the money that's being spent right now, and it's rightly so spent. I just want to say I want to wait before I become more optimistic.
Okay. What about you, Mr. Ariss? Are you cautious, or what?
Well, I would, I'm not an economist by training, so I wouldn't be able to comment whether it's going to be a V or W but what I want to say is that we are at a turning point here, and we can see very different scenarios materializing in the coming few years. And we at the Geneva Association are working on 3 scenarios. So the one we consider is most likely is, progressively going towards a new normal. This is to say that many things will change in the new world. Geopolitics will change, probably fragmentation of economies, of jurisdictions is one area. A new normal in terms of society's choices. And Alex made very important comments, for example, on the experience that people have going to work, the importance of a better balance between work life and personal life. So things will change from that point of view, and changes in the economy as well. Possibility of inflation picking up, and so that's the core scenario. We are moving towards a new normal, and there are ambiguities in this new normal. I can come back to that. A second scenario is it's actually all going to go back to where it was before. So after 1 year, we'll see the same level of air traffic, we'll see the same level of consumption, we'll see everything will go back the same. And when I look at the evolution of financial markets, I agree with Alex. They are kind of optimistic today, and they tend to point at the second scenario, which is not the one that we think is the most likely. And then the third scenario, which is the exact opposite, which is there's a second wave and possibly a third wave, and suddenly everything collapses. And I'm sure you are aware of this school of thought of collapsology, where people think, some people think just the way the world was being run was not sustainable. They were expecting the collapse to come more from climate and environment than from a pandemic. But what we have seen in the past 3 months in the global economy and in what has happened in society is a form of collapse. Everything stopped, everything was shut down. People focused on their basic needs, which was food, and that was it. And so when we try to think of the future, these are the 3 scenarios we kind of work on and try to identify what it could mean for insurance companies.
Mm-hmm. Thank you. So let's see how this will evolve. So I would also, you mentioned about the impact on life, non-life, and I would like to ask you whether, being a life insurer or a non-life insurer, it is better going forward, or, composite insurer, and whether the gap between leaders and follows in the market, the dynamic rather between leaders and follows will change. What do you think, Ariss, about this?
So I will mostly comment on the life versus P&C. So when we look, I'll start with the good news. I think there are good prospects for life and health. I would put them together because it's about insuring people as opposed to insuring goods. I think the COVID-19 lays the ground for good prospects for life and health insurance. Life, because suddenly people realize that they may actually die sooner than they had expected. Health, because they realize that even though, as Alex said, the cost of COVID itself was borne mostly, at least in Europe, by the public system, people realize that unpleasant things can happen to your health, and you'd better be prepared for that. And actually, we see in Asia that the demand for health insurance is picking up. So I think in life and health, there are good news ahead of us. I would add to that retirement. It is likely that we will see an erosion of welfare states, just because states will have taken up so much debt that they will have less money to protect people, particularly for retirement. And so we can also expect to see the demand for private retirement solutions to pick up. I think the situation is very different in P&C. When you look at the correlation between P&C and GDP, it's much stronger than the correlation between life health and GDP. And Alex mentioned we are going to see horrendous figures in terms of GDP growth or GDP recessions this year, -8, sometimes -10. It's said France, for example, is said to head for -11%, and so this is less substance to insure, less cars, less manufacturing facilities, less premiums on liability, and so I think the prospects for P&C are going to be very hard in the coming 2 to 3 years.
Mm-hmm. Thank you. Mr. Sarrigheorghiou?
So I think the prospects for insurance as a whole are good. It's a matter of trust that Jad had mentioned initially. First of all, speaking of catastrophic risks, yes, pandemic is a catastrophic risk in health, but the inverted demographic pyramid and the underfunded pension systems all over the world are a catastrophic risk as we grow older, and we should not forget that. And government should not forget that. And of course, we have natural catastrophes like earthquakes in Greece or other natural catastrophes. So there is a future for all of us. I want to make the following comment. I fully agree with what Jad said, but I just want to add something. As he was speaking, I was thinking, we have a trend of increased regulation, especially in Europe, and of course supervision that goes with regulation. And the world that is emerging in any case, but especially after COVID-19, is a world where people will focus on the basics. I think Jad you mentioned it, is a world where people demand simpler, more clear, more transparent solutions everywhere, including insurance. So increased regulation, which in the form of Solvency II, which is, by the way, about to be reviewed and revised this year, is certainly very helpful and necessary, and I want to be clear about that. And in Greece, I think we all benefit by working within the Solvency II regime. That is one point. And to have serious supervision thereof. At the same time, it is extremely important to focus on the cost of these systems, because to the extent that these systems increase our admin costs, up to a point they add value. Beyond the point that they add value, they make our products more expensive, and people will not buy them, and therefore people will be uninsured in the face of these perils that are ahead of us. So there is a balance in supervision and regulation that both the authorities and the industry, it is to our benefit to find this balance. And the flip side of that, of course, is capital required. We live in a world where capital markets are totally agile and frequently violent. So the minute this industry is saddled by more and more capital requirements, capital is going to go away to other industries. Having said that, it is good to know that also thanks to Solvency II, in a crisis such as this one, we survived the volatility of the markets because we had good capital, adequate capital. So I'm not taking, I want to make points for both sides, because I think that both sides should be on the same side. We should both be seeking optimum capital and adequate regulation and supervision. But the minute you go beyond that, it's in the end, it's going to leave people uninsured.
Yeah, this is a very important point you are making. Mr. Ariss, do you see any developments with respect to upcoming changes in regulation? Can you share whether European insurers share similar views like what Mr. Sarrigεωργίου just shared?
I will, yes, I will comment on the agenda of regulatory and supervisory authorities to say that, and I want to highlight here that even though the association is based in Europe, we are a global organization. We have also American members, Japanese members. And so the people we talk to mostly are actually the people from an organization called the IAIS, which is the International Association of Insurance Supervisors. It turns out they are based in Switzerland, in Basel, and their role has been very much reinforced after the financial crisis of 2008. And the interesting trend that we see in the agenda of the IAIS and so of the global supervisory community is that while after the financial crisis of 2008, their focus was mostly on what Alex was pointing at, which is capital, solvency, this never again attitude towards the 2008 financial crisis, which has led them to add capital requirements over time. But now their focus is shifting not away from that, but they are adding a second priority, which is market conduct. And so, the trust in the insurance industry based on how insurers behave, etc. This is not new, but certainly this has been very much emphasized in the COVID crisis, in the COVID-19 crisis, because these supervisors, they usually are part of the Ministry of Finance, or they have some sort of link, hierarchical link to the Ministry of Finance. And they got the pressure on this, why isn't the industry paying for business interruption? What is the insurance industry doing for the economies under COVID-19? And what you have seen, interestingly, what you have started to see is a tension among supervisors between those who emphasize mostly capital requirements, protection, financial stability, security, and those who emphasize more conduct, the industry living up to people's expectations, and so you almost saw part of them saying to other supervisors, well, you could run the risk of wiping out the industry if you open the door to business interruption too widely. And so I think one of the interesting consequences of this, of COVID-19, is that we've seen tension among the supervisory community between those two tendencies. And in some countries, as you probably know, in the UK, it's actually two different supervisory bodies, one focusing exclusively on financial stability and solvency, and the other one focusing exclusively on market conduct, and you've seen tensions there.
Yeah. Well, one thing that this crisis demonstrated is that simplicity and agility works better. Let's hope that our regulators will take note of this. I noted the market conduct, and Mr. Sarrigεωργίου also mentioned how important it is trust, to instill trust in our business and for our industry. So, yes, these are very valid points. Talking about catastrophic risks, I would like to ask both of you about another risk which has been in the front line a few months ago, which is climate change and the Paris Agreement goals and all these things, which for us insurers are very, very relevant and important. Do you think that focusing in managing health issues, managing the recovery of the economies is going to have a negative impact on efforts and focus on climate change-related actions, either from the governments and from the business side. Mr. Sarrigeorgiou?
If we see the recession numbers that are being forecasted worldwide, I'm afraid that the answer will be yes. In other words, while we must not ignore climate change and the environmental agenda, it takes money, and I think a reasonable forecast will be that they will put some initiatives, environmental initiatives, et cetera, on the back burner until the economies recover. I hope I'm wrong, but that's what I would expect.
Mm-hmm. Mr. Ariss?
Yes, so this is obviously a very interesting question. It's a fear, actually, of many environmental NGOs that this could happen. We at the Geneva Association received a month ago a letter from a number of NGOs asking us to advocate for a green recovery. And so, while I agree with Alex that obviously the state of public finances will not allow to have new money injected towards green projects. There is already today, just to launch the recovery of the different economies, a lot of money put in the table. And many countries have conditioned these investments, for example, recapitalization of airline companies, to greener operations of these industries. And I think this is what we can hope for and encourage, incidentally, governments to do, because we would miss an opportunity of, with all that money that's being put on the table by governments, if we didn't try to orient that into greener investments. So that is happening in some countries, and I hope it happens more broadly.
Mm-hmm. If I may add here one thing, it would be an area to explore within Solvency II that is being revised, whether some sort of capital incentive would be given if you direct your investments to greener areas.
Yeah, I will definitely agree with your views. I'm not optimistic on this subject. On the other hand, based on data from IMF, the size of the stimulus which has been committed already for COVID-19 from globally is around 10 trillion, which is a huge number, huge amount. And perhaps we'll need more. It will be an opportunity missed for wrong reasons if, some part of this money are not directed towards investments and actions which could actually be aligned with the Paris Agreement goals. But we'll see how this evolves.
And if I may, Alex, there's a good case for this, which is the fact that the pandemic crisis we have been through and are still going through could very well be an illustration of what a climate crisis could be, meaning a crisis to which it is far more costly to react to than to prepare for. And a crisis, the cost of which is borne by the most vulnerable people everywhere in the world. I mean, we've seen that. We've seen, white collars working more comfortably from home because their job lends itself to that, and then blue collars still having to work, in the servicing industry to expose their health. And so we see that the cost of the crisis is obviously as often much harsher for vulnerable people, and the climate crisis would look like that. So that's another reason why, for another rationale to support a green recovery.
Mm-hmm. Thank you. So in the essence of time, I will have three more questions, if you're okay with this. So, should the public sector at country level or region work more closely with the insurance industry to manage in the future this type of pandemic related problems like perhaps claims handling, services? Do you see areas where the public sector and the insurance industry can work closely together? Yes. Mr. Sarigeorgiou?
I will say that in Greece, the public sector is not used to public-private cooperation in general, and specifically not used to at all in working with the insurance industry. I think the association is making efforts to open the doors in that area. Not specifically what you're referring to, but in any case, we have to start somewhere. You know, in Greece, the tradition has been that it's either private sector or the public tries to do everything they can, okay, if possible, to crowd out everything else. I think this is changing. It is radically changing, I think, these days, but we still are far away from seeing it as a reality. So, you know, the trust is not there, the mechanisms are not there. We've got a ways to go.
Mr. Ariss?
Yes, so I agree with you in the sense that facing such a major challenge, we have to change our habits and to imagine solutions even in working in different ways that we were used to. I mentioned earlier that one of the three things the industry could and should do is work with the public sector, with governments, to imagine a scheme to cover the next pandemic. The good news is that in some countries, this experience already exists. That there are at least three areas that I can think of where the public and the private sector have worked together to set up schemes to better protect people and businesses against major risks. One is natural catastrophes. You know, you have the flood scheme in the US, which has its limits and its drawbacks, but at least it exists. We have a number of cat-nat schemes in different European countries. So that's one example. The second one, which is much more recent, is terrorism. There was no collective pool for terrorism until or collective scheme for terrorism until 20 years ago. And then, as you know, in the wake of 2001 and then a number of terrorist attacks that happened, several countries have set up pools backed by governments to protect societies against terrorism. A third example that we can think of is nuclear accidents, where, you know, this is another example of if a major nuclear accident happens where the insurance industry itself could not be alone taking the cost of it, and where some sorts of pools backed by governments have been set up. So the industry has an experience in some jurisdictions, in some examples, to working with the public sector, and I think the objective is to capitalize on this experience to do more of it for the pandemic topic.
Thank you. And one question for Mr. Sarigeorgiou. You mentioned earlier how severe the hit was on new business at the beginning of the lockdown period, and now that you know, things are recovering. On the other hand, we have not seen a lot of movement with respect to lapsation or retention of policies is healthy. Are you optimistic with respect to the level of lapses we will experience in the next 2 to 3 years?
I'm optimistic, subject to the level of, to the shape of the recovery and the level of damage done by COVID-19, minus the substantial stimulus that happened, that will eventually affect unemployment. If unemployment gets hit and remains very high, eventually eventually it's going to have an impact on lapsation. If unemployment again starts receding, and let's not forget that in Greece we suffered huge unemployment numbers for years, and just as we were recovering from the previous crisis, now unemployment has gone up again. If it goes up and stays up, we'll have an issue. If it recedes quickly, then I think it's going to be okay. It's very important for people who sell, and I want to say one word here, all these kinds of risks and the complexity, especially on the business side, raise the importance of good advice of a professional who's selling insurance. Insurance is the risk management of the family and of the company. So it's a very important thing. So it's important for them to raise the fact that if you put 100 euros in a mutual fund, it's very different than putting 100 euros in a pension third pillar savings product. The second product is there. You must do your utmost to keep it till the end. The other one is an investment, so it's a timing difference. So I think people, for the most part in Greece, realize that, and I would be optimistic unless the recession is long and severe.
Mm-hmm. Thank you very much. And now my final question, if I may, it will be on a personal basis, how this crisis, the recent crisis, have affected you, and whether you plan to do things differently, either as leaders with your teams or at a personal basis.
Alex, do you want to go first?
All right, I'll go first. So first of all, I walked my dogs a lot more. Or I walked my dogs, and before I didn't used to walk my dogs. So, but it brought me closer to my team here at Eurolife, but also the people of the association. You know, crisis brings people closer together, even though, strangely enough, we could not meet at the same time. And the other thing that it did is it eliminated, I think, for all of us, the social aspect of our workday. So you work all day, and then from 7 p.m. on down, you have speeches, conferences, things to attend, business dinners, etc. All these disappeared. Part of them reappeared in the virtual form, like we're doing right now. But all of a sudden, we have a lot more free time, and I will leave it at that. We'll need to understand the utility of this, all this stuff that was happening on the side of our workday versus nothing now. I'm sure the balance is somewhere in the middle.
Great, thank you very much. And I hope that you will manage to keep your gold or platinum status with airlines. So, Mr. Ariss.
Yes, well, I'll start with the professional level. I think we have all discovered that our organization have moved very swiftly to remote mode and to home office format. And so I think this will change the way we work, and this will certainly change the way I work. I was very much in the old format. I'm old school type, you know, you go to work every day from 9 till 7 p.m. And I think we have realized that we could work in different formats. More trust also within the team. I think we, people are working remotely. We don't precisely know what they're doing during the day, but as long as they deliver, we're fine. And so I think it has generated probably more trust between me and my team going through this experience. So that's what I would highlight professionally. Personally, I've done most of my confinement in Paris, which is home for me, before I came back to Zurich early May. And you realize you live with very little. And so I certainly think it will change my consumption patterns. You don't need to fly to the other end of the world to enjoy a nice time. And so maybe that'll be better for the planet as well.
Yes.
Correct.
Excellent. Well, thank you very much for being here with us, for sharing these extremely useful insights. And I would like to switch in Greek now. Ευχαριστούμε πάρα πολύ όλους εσάς που παρακολουθήσατε αυτή την συνάντηση και σας περιμένουμε κοντά μας γρήγορα. Ελπίζω όχι μόνο virtually, αλλά και physically. Να είστε όλοι καλά και θα τα πούμε σύντομα. Ευχαριστούμε πολύ.
Ευχαριστούμε. Thank you.
Thank you very much. Thank you.
Thank you very much for the invitation.
Thank you, Jad.
It was a pleasure.
Thank you. Talk to you.